Good morning, traders. It's Wednesday, the 19th of December, and it's just turned 8 a.m. So, we've got a couple of announcements coming up this week. Later today, just in a couple of hours, we've got inflation data for the pound, which I don't think is going to have a massive effect on the market. Other than that, we've got both US, Canadian, and interest rate decisions this week, with the US rate decision later today. So all of those events could bring some volatility into the market as a kind of final push for the year and for the month of December, before we see volatility come down and the markets find their ranges over the holiday period. As over this period, over Christmas, just like over summer, investors tend to go on holiday and not really focused on charts, on the markets, so some money is pulled out of the markets and there's not as much volatility, etc. So to get you started with Australian dollar, US dollar. So this week we've already seen a bit of bullish strength heading back towards the moving average resistance. Now price is maintaining above this 61.8%. However, I would like to see price break through these moving averages and essentially close above them to accept the upside scenario from here. So obviously that would see price push through this region, essentially rejecting this head and shoulders pattern that I mentioned earlier in the week. So on the daily time frame, you can see that we had that uptrend, which was broken. 0.7150 was met to the T, and then the past couple of days have been largely indecisive. Yesterday the market attempted upside, found the exponential moving average, and then pulled back to close as a doji candle. The market's attempting once more to move upside, but again is currently rejecting the exponential moving average, and so we could now see price roll over back to the 0.7150 and even lower down towards the 0.7100 and 0.7125 region. So anywhere within this refined zone, I'm looking for price to fall towards next. As I say, in line with the weekly time frame, if we do get a strong close above this level, then we could be looking at price extending up through the 0.7250 major resistance and beyond to attempt previous highs. In terms of Fibonacci extensions, we'd be looking up towards 0.7500. So overall, actually a very nice target up here, but in the short term, as I've said previously, I do expect that price may roll over, making a final attempt at the downside. So this is on the 8-hour time frame, and after the bearish moves, we can see that price is largely indecisive. We are seeing some choppy price action here. So you can see that we had our impulse wave here, consolidation. So we had a small retracement here in a range. Price pushed back down. So another impulse wave. Now we're seeing consolidation once more. and given all of the accumulation here, within 1, 2, 3, 4, and this will make the 5th consecutive rejection of that 0.7200, we may now see our final impulse to the downside, pushing towards the 0.7150, potentially down towards that 0.727125, which lines up with the breakout from this range that I had drawn on at the start of the week. Had it looking something like this. So obviously duplicating that would see us down towards 0.7130, 0.7125. Onto the 4-hour time frame, and you can see that after hesitating at this 0.7200 level yesterday, we did see bearish price action below the moving averages. Moving averages are flat, so it doesn't give us a lot of information, despite the fact that they have now crossed over to the upside. You can see that we are within this smaller range. So a breakout above this 0.7200, a strong close around this region, would see price head up to 0.7250 immediately. However, whilst we hold below that 0.7200, I do expect to see price break back through these moving averages to head towards the bottom of the range. Now, if we duplicate that range, we're back within that refined fib zone around the 0.7135. So as I say, looking towards back towards this zone for price to come to potential for a spike down before initiating the upside move. With volatility coming today and towards the end of the week, we may well be seeing that this week. However, as I say, coming towards the end of the year, price is looking to find its range. In terms of the daily, we could be ranging around this region just above this 0.7150 until early January. So onto Usdjpy, and we have been bearish pretty much all week on this pair, falling in line with my analysis. So we've now met this weekly uptrend, and as you can see, price is pulling back slightly, which doesn't surprise me at all. I mentioned earlier in the week that we may see further consolidation within this region. You can see we've pretty much seen alternating bullish and bearish weeks. So following the bounce from this trend line, could set next week up to be a bullish week, but nonetheless, overall, we are seeing the market start to turn downside. So looking at this 112 region, this 112 weekly support as kind of the main significant level here. A break through this level would see price roll over towards 110. So here on the daily time frame, see we've got that pennant formation, and after coming into the refined Fibonacci retracement zone, price fell back through the moving averages, and bearish momentum has continued into yesterday's session. However, as you can see, price came down to these prior lows and retraced close back above the 112.50. The same has happened today with bearish momentum continuing, spiking slightly lower. However, now the market continues to respond to this level. What we can see here is, despite each one of these lows being slightly lower to the last, so we are creating discretely lower lows, it could actually be considered as a triple bottom formation. Price all coming towards the same, the market coming towards the same price region before reversing. So if we do get a significant pullback, if price does close back up towards this 112.50 region and even slightly higher, I wouldn't be surprised to see further consolidation and another attempt at the upside move. However, as you see from the upside, we've got a high there, lower high, lower high, and so in line with that, we could be seeing another lower high, potentially around a test of the moving average resistance, before then falling lower to the 112 level initially. Obviously, as I say, looking bearish overall. So we could just see a straight push towards a 112 weekly support level, and then see some consolidation within this zone over the next week or so. On the 8-hour time frame, here we've got the 112.25 minor support level drawn in. You can see that price came to this level, rejected it, fell back to this level, and we've seen another rejection. So as the moving average falls on top of price, we're seeing momentum really kind of slow down. So I do expect to see this moving average tested before extending down towards 112, whether we see consolidation within this zone first and then price edge slightly lower, or as I said on the daily time frame, we could see price come back up to this 113.20 level before then falling lower. 4-hour time frame, much the same. We've just got further rejections from this 112 level, which would lead me to think that we may see upside. So what we can do is now draw a small range here. So as you can see, price is within this range, breakout one way or another towards the downside, Fibonacci extension levels, towards the upside, that 113 and 113.20 before the reversal. If we actually take a look at the dollar index, we can see that the dollar has been very much bearish this week. Yesterday attempted to break through this ascending triangle towards the downside, however retraced to close as a hammer candle back at the moving averages. Today has gapped down below the moving averages, however they haven't yet crossed over, so there is the potential to see price pull back up and, as I mentioned at the start of the week, continue consolidating within this region. We haven't yet broken the prior lows, so we are definitely still in this kind of uptrend now. It's all about how price responds to these moving averages. with the interest rate decision later today and FOMC statement, we could quite easily see volatility which causes the break of this trend line as we look down toward that 96 level. We could be seeing the dollar roll over much earlier than I expected. Obviously, I did say at the start of the week, and I made an article about that on the website under the market updates. Oh no, sorry, that was under technical updates. That we could be seeing the dollar strength having come to an end now. I was looking at potentially the next few months for that to come to light, the next few weeks, next few months. However, should we break this trend line now, we could be seeing that 96 level much sooner than anticipated. But as I say, in line with the dollar yen, there is potential to see some further upside back towards that 97.5 resistance. So onto Usdcad, and we've seen this pair fly recently, and well, this week, and this is off the back of lower oil prices. So I'll quickly show you oil. We've actually just slipped below that $50 per barrel mark and are now heading towards that $45 region, and I do see the potential for oil to fall much lower towards $40 and eventually $35 per barrel, especially now we've fallen below that $50 level. We may see price pull back up slightly. However, with how bearish price is looking right now, there doesn't look to be too much hope for oil right now. So we've now met that 1.35 monthly resistance level, pulled back slightly, and we may see further consolidation within this zone. I have previously mentioned the significance of this highlighted zone here. So I would like to see price retest this before then potentially heading higher, which would line up with with lower oil prices and short term a stronger dollar. So on the daily time frame, see that we've just largely continued in this overall uptrend. Early in the week, it looked as though we could have been reversing from this level. However, price did find support on the exponential moving average, and then we saw strength through this region. Obviously, yesterday was that big move with that big move with oil, and we did see an amount of dollar strength which did help that push. Retraced from that 1.35 resistance, and now I do expect to see that tapped once more before potentially falling back towards that 1.3400 level. If we take a look at the Fibonacci retracement that we had on here, saw the price came into that refined region initially. After coming back to this region, I expected that we may see price attempt this zone once more. However, as I say, found support on the exponential moving average, so we didn't get that confirmation that we required to see that move, and now we are seeing that push towards that Fibonacci extension target. 8-hour time frame, you can see that we did have this flag formation. I'll show you that on the 4-hour. We had this ascending flag formation. Price hesitated as it broke out from this formation, but again found support on the exponential moving average in line with a retest of that trend line, and then exploded higher. So we are seeing some hesitation as price heads higher. However, currently we remain above the exponential moving average, looking like price does want to return towards its 1.35 and fulfill Fibonacci extension targets around that 1.35 200. So as I say, in line with lower oil prices, we may well be seeing that 1.3580 daily resistance. We've always got to consider the alternative perspective and the downside scenario. So as I've just mentioned, we may see price return to retest this zone. I would actually quite like to see that retested before potentially heading higher. A break of this zone would see price roll over towards that 1.3250 that I was previously looking at. Now onto pound dollar, and we've not really had any significant news or any kind of significant developments regarding Brexit. I think all of that's going to be left to the new year. Inflation CPI data is coming out at 10:30 this morning, just in a couple of hours. But as I say, I think the reaction to this will be largely flat, so probably not something to worry about too much. Looking more towards the rate decision for some volatility. However, all of this seems to be overshadowed by Brexit in this market. Everything appears to be waiting on developments in the Brexit scene. So currently trading as an inside bar here. You will know that I was anticipating price coming back down to the 1.2500, and if we take that to the daily, we can see that there is still potential for that. We're just within this zone right now. Price is moving higher, but edging higher, I'd say. We had this inside bar formation formed on Monday, and price is now trading just at the top of that inside bar. Yesterday we did see price spike higher towards that 1.2700 in line with my analysis, but then pulled back to close as this shooting star candle below the exponential moving average. Momentum has attempted to continue upside with today's candle, but as I say, it's now trading above just around the top of this inside bar. So providing we can close around this level and slightly lower, we may well see price fall back to that 1.2500 before then initiating the upside move. If we do manage to close above this region, towards the 1.2700, then we can look at 1.2750 immediately before a pullback. On the 8-hour time frame, we can see that the moving averages have actually crossed to the upside. However, you can now see that in line with the overall downtrend, we do have this downside Fibonacci, which has price having come into that refined zone in line with that 1.2700. So as I say, providing that price continues to close below this level, we can still look at price rolling over. I'm not sure about the potential of price to get down towards this 1.2400. Obviously, if something significant does come out with Brexit, say for example a no deal, second referendum, anything like that, then that is definitely within reach with that added volatility. However, without that, as things start to move forward, we will be seeing a pound potentially start to pick up. So strong close around this level, looking at 1.2750. If not, I do like the look of downside in the short term. Personally, I'm staying away from this trade at the moment, and the reason I say this is because of the uncertainty surrounding the pound and even the dollar at the moment, and just some slight uncertainty surrounding the technicals. So as you'll see here, we do have this counter trend on the 4-hour time frame, which would be quite a nice break should price fall back below the moving averages, back below this 1.2620 daily support. You could see a retest around that level, moving averages cross over, for price to then complete that breakout around the 1.2500. It does look like a very nice position, to be honest. The more people that are open to, traders that are open to slightly more risk, may take that position around here, stops just beyond there, and then targets down at the 1.2500. So a nice 3.6 risk reward there. Could line up to be a very nice trade. However, as you can see here, what we have is essentially an inverse head and shoulders pattern. So we've got the left shoulder here with a bit of a spike down towards that 1.2500, the head down at this 1.2500 level, and then the right shoulder over here. So while we trade around this level, it's a bit of a funky neckline, but while we trade around this level, we could be seeing price break here and extend higher. However, as I say, I'm edging towards the downside in this market. Now, the Fed is expected to hike rates later today, which is seen as a good thing for the dollar. However, with bearish comments from Jerome Powell last month, sentiment does seem to be shifting somewhat. So I think the markets are expecting a somewhat dovish rate hike. So for the first time now, the Federal Reserve is starting to show some concerns over the economy. but for some reason the technicals do seem to be suggesting that we could see dollar strength. We'll just have to wait to see how that pans out later today, as we don't actually trade based off the fundamentals. We just try and incorporate that into our trading style. So I hope that makes sense for you guys. Any questions, please don't hesitate to drop us a comment, even email us at contact@insidefx.co.uk. Yeah, and if you like the content, please again drop a comment in the boxes below. Thanks for watching, guys. Have a great weekend and a great Christmas.